So we have spent the last 2 and a bit weeks of lockdown going through the part A of our new topic, interpretation of accounts. It's looking likely that schools will be closed for February, so we will see when we're back. But for now, what you call it, I'm going to go through the part B. So we've looked at the ratios, and now I am going to go through this part. This part here, the top part, is worth 50 marks. We spent a good bit of time on it. I know you don't have this kind of setup here that I have to the right. I have this in my own OneNote, and I have the stuff that I'm putting up in the Google Classroom. But I just want you to just, obviously, this is your normal question, that if I was, in class, that I'd hand you out your normal question. This is the top part. We've looked at some of this so far for calculating ratios, and this is just the rest of the question here. So I've just zoomed in. So this is the question. If I was to hand it out to you, this is what what you would see. The first 50 marks are going for the ratios, and we've looked at this in good detail. I have videos up that I had done previously that go through how to calculate the ratios. You have the list of formulas. It's just a case of knowing which ones to use and then just putting in figures. Part B is always the same as well. So the part A is always on ratios. Part B is a report. Basically, what you're going to do is you're going to assess how the company is doing based on some of the calculations here and some other formulas that you'll need to calculate using figures, from the question. And you're going to compare how the company is doing this year. In this case, it was from 2018 versus last year. Now you'll see here there's a box up the top right that we haven't looked at yet. This is our earnings per share. It's our EPS from last year. This is our dividends per share, our DPS from last year, our interest cover from last year, our asset test ratio, our market value of one share. Remember, the market value of one share is here. So this is the market value of one share here. This is our ROC, our return on capital employed. This is our gearing. This is our dividend cover. This is our dividend yield. These are all different ratios that we might need to calculate for this year and compare them to last year. And we do so under a couple of different headings. So I'm going to go through the headings pretty soon. I'm going to go through this 2019 question. The only other thing I'll say to you is, in general, and I'll quickly show you the other question. So this is the 2019 question. I have the 2018 question done up here. This is the exact same question. It looks the same. You calculate some ratios. And then at the bottom here, you're asked, I have it done here. At the bottom here, you're asked to indicate whether the debenture holders would be satisfied. So here you're asked whether the debenture holders, and for 2019, you're asked whether the ordinary shareholders. And that changes things. So there's actually 4 different things they can ask. They'll ask you about if the ordinary shareholders will be happy. They'll ask about if you would like to purchase new shares. If somebody was going to purchase new shares, either a new shareholder purchasing new shares or somebody already who owns shares purchasing new shares, would they be happy? So the first one is a current ordinary shareholder. The second one was a new ordinary shareholder, basically. The third one could be debenture holders, as we see here. And the fourth one is generally bank managers. They're the 4 different ways they can ask this question. We see here, this is 2017. It was advise the bank manager if a loan of 300,000 at 6% would be charged, should be granted. And what you're doing is you're doing the exact same thing here anyway. You're just assessing how the company is doing, and obviously if the company is very profitable, you'll say to them, oh yeah, you're perfectly happy to give this company a loan. And if they're doing bad, then you'll state why they're doing bad. This is debenture holders. Debenture holders are people who, or the companies who might have invested a loan. So these are all also people who have given a loan previously to the business, and you're going to assess how the business is doing, whether their performance is good or not, and then say what would the debenture holders be happy or not. First one here, ordinary shareholders. If I'm an ordinary shareholder, I'm somebody who invests in the business. Will I be satisfied with how the company is doing? So just overall, I'm going to zoom out here. overall, for this topic, again, this is a question that comes up every single year. The first 5 parts here, always asked on ratios. If you know the formula, you know where to put the figures in, you can get 50 out of 50 here. It does take time to practice the formulas and understand how you're going to go about it, but it's very repetitive. And the formulas are just something that you can learn off, you know. Part B is always basically just to assess how the company is doing. And you assess how they're doing using a general report. It's theory, it's generally about 2 pages long. And you just write the 2 pages under certain headings. To be honest, it's nearly always the same. There's just different ways that you'll need to do it depending on what the question is asking. So again, one way they could ask you is from an ordinary shareholder, and that would be slightly different compared to if it was a debenture holder or a bank manager or a new shareholder. So that's just a background. What we're doing is we're finding certain ratios under certain headings for this year and comparing them to last year. So I think it's always best to go through an actual concrete example. So this is our concrete example. This is the 2019 question. We have done this already. The left side, we've looked at the ratios. We define cash sales, dividend yield, dividend cover, return on capital employed, and the price earnings ratio. And I've gone through this. This is the first video we had looked at for ratios. So all of that is done. Now we're on to part B. And you can see here from my part B that I have 1 paragraph here, 2 paragraphs for dividend policy. My 3rd paragraph is liquidity. 4th paragraph is gearing. 5th paragraph is sector. And 6th and final paragraph is my market value of shares. So I have 6 different points. And they're all worth between 5 and 7 marks. And every time you write about an ordinary shareholder, you will write those same 6 points. And the only thing that changes is you're going to change whether you're happy or not with how they're doing based on what numbers you get from the formulas. So again, if you know how to calculate the formulas, you're able to get these figures and then you're just commenting. So I'm going to quickly talk through it in a second. First one here is profitability. So we're seeing as a company making a profit. The second one is dividend policy. So if somebody has shares in a business, they can receive a dividend. They receive a little bit of a payment maybe every year off of the company. So what's the dividend policy like for this company? Liquidity. So what's their cash situation like? Do they have much cash? Gearing. Gearing is looking at basically how much of the company is financed by debt. Our sector. So what we do here is we actually look at the sector itself in terms of what they're operating in. It's always given at the top. So Shannon PLC is a company involved in the renewable energy industry. So what we do then is we start talking about the new renewable energy sector, and we start talking about how that company is or how that industry is performing. And the final one we look at is market value of shares. So how much are the shares worth? That's a general overview. Just to get into more detail, I'm going to come back to this top line in a second. This will be your 2 pages. I'll be asking you to take this down soon. And this will be how you answer a question for ordinary shareholders. And all you're going to change, once we've done this out, all you're going to change is the percent figures, because obviously every question is going to have different numbers. And then obviously, depending on how the percent figures are doing, you will change a small bit of your commentary. As in, you'll say, okay, this is good or this is bad. So the first one we're looking at is profitability. And for profitability, you'll always need to, I'm going to get you to take a couple of bit of notes right now, just for yourself. Getting out a pen. If you don't have a pen and paper in front of you, obviously pausing the video. First heading, so you're writing first heading is profitability. And profitability, you're going to need to comment on the return of capital employed. So that means you're going to need to find that formula. You're going to need to find the formula for this question. You can see here that we were already asked to do that in part A. So if I go up to part A here, for my return on capital employed, we found out that the return on capital employed was 9.66%. because we'd already calculated. So that's the first formula you're going to need to use. So for I'm going to get you to write down profitability equals return on capital employed. So for 2018, which is this year, we had already calculated that. We were asked to calculate it up here, and we calculated the return on capital employed, part A, to be 9.66%. So all I'm doing here is I'm stating the return on capital employed for 2018, which is this year, is 9.66%. Now, all I've done now is I've talked about this year, and you'll always do that for every question. The next thing you do is you talk about last year, because they give you over here, what do we see? Return on capital employed. This is for 2017, and in 2017 the return on capital employed was 5.8%. So this year it's 9.66%, and again you were asked to calculate it using the formula. The formula is actually net profit divided by capital employed multiplied by 100 over 1. So this year it's 9.66%. Last year it was 5.8%. So what does that mean? It's increased by 3.86%. This indicates a healthy trend. So obviously that's a good thing. The return on capital employed, the money you'll make, the profit you'll make from investing in the business, last year was 5.8%. This year it's 9.66%. It's an increase of 3.86%. This indicates a healthy trend. So all I've done so far is state what it is this year, state what it was last year, and say that it's increased by 3.8%, and this is a healthy trend. You would need to state all of that to be marks going for each step along the way. Now we're kind of further commentary on it. So Shannon PLC is a profitable company, as the return of 9.66% is better than the return from risk-free investment of 1 to 2%, and is better than the debenture rate of 6%. So all I'm doing here now is, you'll do this for every single question, is you'll always comment on the profitability for the return on capital employed. You'll state this year, so I want you to write down profitability, return on capital employed. Write this year. So I'll try and just give you a little bit of help here. So profitability, again, while I'm writing, you're taking this down. ROCE is your return on capital employed. The first thing you're going to do is you're talking about this year. What's this year's figure? This year's percent. Then last year's percent. What's the trend? So if it goes up, it was 5.8%, now it's gone up to 9.66%, that's a good thing. That's a positive trend. And now you're going to state, are they profitable? So I've done that here. They're a profitable company, and I have to compare it to two things. I'm going to compare to risk-free investments. Risk-free investments is just, a general understanding that if you're investing in something, a risk-free investment form, like a government bond, maybe, that you might get 1 to 2% return every year. Whereas if you invest in this company, you could receive up to 10% nearly return each year. So you're comparing the profitability return for this company to the risk-free investment of 1 to 2%. And it's always just state 1 to 2%. That's the way it is at the moment. And also comparing it to the debenture percent. And this is the debenture percent here. They give it to you in the question. A debenture would be to get another loan. So if you were to get a loan, how much would you charge for interest? How much would be if you were to, give a loan out to somebody? How much percentage interest could you get for it? And that would be 6%. So compare to debenture rate. Finally, all we're looking at is we're saying that they're making big profits, 9.66%, better than last year. This is an increase. This is a healthy trend. It's better than the return from risk-free investment of 1 to 2%, better than the debenture rate of 6%. All you state at the end is they're making more efficient use of their resources. Shareholders will be happy. And the reason why I'm saying shareholders, and the reason why I have that in red, is because that is tailored towards this question. because we're asked about if the ordinary shareholders would be happy. In another question, we could be asked, is the bank going to be happy? But in this one here, would the ordinary shareholders be happy? So what I'm doing here is, and this is going to be very, very, very similar, regardless of what the question comes up, most of this will be the exact same. And all I'm doing is I'm stating how the company is doing from a profitability standpoint. This is my formula. This year, last year, the trend, is it going up or is it going down? Are they profitable? So you not only do state the trend is, it's better, profitability is increased by 3.86%. You're stating they're a profitable company. Comparing to the risk-free investment, it's better that the risk-free investment is only 1 to 2%. Comparing it to the debenture rate, which is only 6%, it's better than that as well. You're stating that the company is making efficient use of the resources. Shareholders will be happy. And what you've done there will more or less be the exact same as how you'll answer every single one of these questions. And it's the same. And it doesn't take that long to get into the habit of just learning this off here and just having an idea. Once you've done it so many times, you quickly get into the swing of it. What's the return on capital employed? What was it this year, last year? Trend? Are they profitable compared to the risk-free investment and debenture rate? And then you state whether they're making efficient use of resources, or maybe they're not. Maybe their profit is bad, and shareholders will be happy. So will they be happy? Use that and you'll get through this no problem, with full marks, I will state. I'm going to take this out now and just go back to the second paragraph. The second paragraph here is on our dividend policy. So this is the second one I'm going to cover here. So dividend policy, what I'm going to do here is there's 3 formulas that I'm going to look closely at. So the 3 formulas here, and you can get a hint as to what you'll need to write about. If you look over here at last year's figures, you'll see that they talked about the dividend per ordinary share, DPS, they talked about the dividend cover, and they talked about the dividend yield. So for these 3 things here, you're also going to need to talk about these 3. So dividend cover is 2 times. I just have to cancel that off. So there are the 3 formulas from last year. I'm going to talk about these 3 formulas for this year as well. So I need to know what the formulas are. Again, you might have been asked to find out some of these figures already. Dividend yield, dividend cover, and in order to find them, we would have actually had to find out the DPS as well. So if I go up to my part A, and I look at my part A, let's look at our part A here. In the part A, I was asked to find my dividend yield. And in order to find my dividend yield, I defined my dividend per share. My dividend per share was 7 cents. My dividend yield was 5.19%. And my dividend cover was 2 times. I have all of this information already gathered. And look at the question. This is the DPS from last year. This is the dividend cover from last year. And this is the dividend yield from last year. So I've already got the figures for this year, and they've given me the figures from last year. So all I have to do is comment on it. And it's quite simple. Again, for dividend policy, sorry, just to bring that back down here. So dividend is my second. This is my second paragraph. So for dividend policy, I have my dividend cover. I have my dividend per share, which is DPS. Now my keyboard is a little flaky sometimes, so some of these mightn't come out. And finally, I have my dividend yield. Okay, I'm going to be a little bit slow. This is a problem I'm having with my keyboard. I have to bring up. An on-screen keyboard. So I'm going to try not to type as much because it's just a disaster. It takes me too long to type sometimes. So I have my dividend cover, I have my dividend per share, and I have my dividend yield. So these are the three formulas. I'm probably just going to comment or highlight what's here, and I'll get you to write down if I have a few things that I want you to write down. So this year we've already calculated up here that the dividend cover was 2 times. You were asked to do this. They asked you to do this in the question here. They asked you to find the dividend cover. So the dividend cover we found for this year is 2 times. So what do you think we do? Dividend cover is 2 times. Last year's cover was also 2 times. This is last year's figures. 2017, it was also 2 times. All we have to stay here now, so we're stating dividend cover. Again, I can't really write this. I'll see, can I? Yeah, okay, it's working out. This year versus last year. So dividend cover, I'm writing this year versus last year, and I'm asking shareholders would like to see profits being retained for expansion purposes and repayments of loans. So dividend cover and 2 times is generally around a good ratio, but it hasn't improved to last year, and I'm just saying that shareholders would like to see slightly more profits being retained for expansion. And this is your little story you're saying here. Other here you're saying that they are making more efficient use of the resources, shareholders will be happy. Here you're saying shareholders will either are happy with profits being retained, they are not happy with profits retained, or because it hasn't changed, I'm going to say they'd like to see slightly more profits. Because I can't say they're unhappy and I can't say they're too delighted either, because nothing's really changed. So I'm going to say shareholders would like to see slightly more profits being retained for expansion and the payment of the loans. So I'm going to write here comment. What have I done? I've done dividend cover. I've said what it was for this year, said what it was for last year, and I'm going to comment. Shareholders would just like to see slightly more profits being retained. That's my dividend cover. The second one we were asked to get is dividend per share. So dividend per share is the second one. The dividend per share, okay, 2017, last year, DPS was 5 cents. We've already had to calculate it for 2018. In order to get dividend yield, I had to find my dividend per share. Dividend per share would be up here. I had to calculate it, and it's 7 cents. So if I go back to this now here, I know that my dividend per share this year is 7 cents. Last year it was 5 cents. So it's gone up. Shareholders will be happy. So what have I done again? I've commented on this year. I've commented on last year. And now I'm again having my general comment. Last year was 5 cents, this year 7 cents. Shareholders will be happy with the improvement based on current performance. This trend is likely to continue. This is, use the exact same thing every single time, or else shareholders will not be happy because dividend per share has fallen, and they would like to see an improvement. If it was going bad, but obviously it's going good. It's gone up up 2 cents. So again, it's the same thing. This year, last year, comment. Third one here is dividend yield. So dividend yield has improved. It was 4%. Here you can see our dividend yield was 4%. And if I go in my question here, I was asked to calculate dividend yield. So if I go up here, I can see that my dividend yield is 5.19%. So 5.19%, and last year was 4%. So what's after happening? So dividend yield has improved from 4% to 5.19%. Again, what am I doing? This is my third one. I'm stating my this year versus last year. This year, last year. Shareholders will be happy the dividend yield is above the return from risk-free investment of 1 to 2%. And again, this is just my general comment. And if the ratio is bad, if it was going down, if this year went down to 1%, I'd be saying that disappointed with the trend and disappointed that it's not above the return from risk-free investment. These two paragraphs are what you'll be writing for profitability and dividend policy. Now, the parts in red are the parts where I'm commenting on shareholders, 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 shareholders. That's going to slightly change if I'm asked to do this on a bank manager or debenture, but everything else will stay the same. And the comment, you just change the comment to suit the who you're looking at and who's looking at the accounts. So that's just the first two. There's four more. We'll be looking at the liquidity, gearing, sector, and market shares, but they're very, very similar. Sector is actually different. Sector, you're just talking about what they're operating in, and I'm just going to give you a spiel that you can write about for all the different sectors. So we don't even have to worry about that too much. There's no calculations. You're just saying how the renewable energy is doing versus how construction is doing. And to be honest, for your exam, you're going to say that all of them pretty much are doing bad because of COVID. But the other three here, market value of shares, gearing and liquidity as well, I'll go through the next day. So all we've looked at here is we've looked at, this is our question here, and just trying to follow the mouse. We can find the figures for this year, the ratios, and in fact, we found a lot of them already. And what we do then is we compare them to last year's, and then we comment. And there's certain things we'll have to do in our comments, and there's certain things you'll have to say. But once you've done it once, it gets much, much easier. So that's what we're doing for this week.